Okay, it is August 8th, Monday morning. Let's get to work. Uh, First, I need to do a sound check. I want to make sure that anyone post in the comment section that they can hear me. I want to make sure my sound is working before we move forward. So let me know in the comment section that the sound is working. It's good. Okay, great. All right. First, I always want to make sure that you guys have an opportunity to post any questions that you might have. So you want to post those questions now. You don't want to post them towards the end because there is a slight delay and sometimes I don't catch your questions. And then I end the broadcast before your questions come on. All right, let's get started here. We're going to go into first the earnings edge. So what happened last week with the earnings edge? We traded Win. This was interesting. It wasn't quite as liquid as some of the others, so it kind of took, the mid price was up. We had to, for example, the mid price might be $3.30. We would have to sell at $3.20. In other words, we had to have like a 10-cent move to get out of this thing. So liquidity wasn't quite there with Win, and that was my best opportunity, the best pick. It went through all 8 filters, but it did come out on top. We came out $300 ahead, so that was another winner. So the record so far for the earnings edge is 19 wins, 5 losses, and 3 ties. But since I have been using all 8 filters, I think I am 5-0. So all 8 filters is working out well. There's no guarantees it's going to work every time, but so far for the last 5 trades, it's worked out well. And overall, the earnings edge, you can see the P&L here, 58.74. You can see the P&L is not moving at all because we don't have a position on. And we're up about 17.5% year to date with the earnings edge. Okay, and there's a link in the description if you're interested in getting involved with the earnings edge. And I recently lowered the price just to $149 a month. All right, next let's get into the Premier Level 5. Of course, this is my favorite. All right, on the Premier Level 5, one of the things I like about this is it has completely objective rules. There's no guessing. There's no changing the rules as we go along. I kind of see that quite a bit, even with hedge funds. And the back tests are very accurate because, they're hard black and white rules. So there's quite a few advantages to the system. Now, overall, we have 4 positions on right now. So our record is 4 wins, 0 losses, 2 ties, and 4 open positions. You can see the 4 open positions are obviously taking us down a little bit. We started this account with $30,000 and we're down around probably close to 2%, maybe 1.5% to 2%. And our lowest drawdown is close to about 4%. And when you compare that to the S&P, which from inception, which was April 8th, the S&P has been down 19% and it's currently down about 6.75%. So you can see the drawdowns are much lower. And if you watch my last video, it's all about keeping those drawdowns low, and that's how you outperform. And I check out my last video that I posted a few days ago, and it'll talk about drawdowns and how important they are. All right, let's get into the safe wheel. This is the trade that I actually trade live right in front of you. Therefore, you see every trade that this thing has been taken live. And let's see here, you get into the right account. And we're dealing with Bank of America, BAC. So when we're thinking about the safe wheel, First thing we look to see, do we have any positions? Do we own any shares? So we do not. So what happened last week was I sold a put, and that put expired worthless. So I was able to collect that premium, and that's basically the wheel. That's the conventional wheel. And so right now, all we have is this put hedge on. So the question is the put hedge good enough, or is it close enough to the money to continue to be a good hedge? One thing we look at is how many days it is. So if it's around 100 days or under, we want to get out of the hedge. And then the second thing is it within 70%? Is this strike, the $25 strike, within 70% of the price of the stock? So I did the calculations at $34. So we're within 70%. If we were not, we could either roll it up to be 80%, or we could actually start a whole new cycle and a whole new underlying and a whole new trade if we wanted to also. But we are within 70%. Therefore, we're going to keep this hedge, and therefore, since we have our hedge, we're going to continue with this cycle, and we are going to sell a put. So basically starting this the wheel all over again. So here is the put hedge in this particular expiration cycle. It's not going to depreciate as fast as anything in the closer expiration cycles. We're going to go to the closest expiration. 4 days ago, expires on Friday. And currently we're trading around $34, $33.50. So $33.50 here is out of the money just a little bit by what, 30 cents? And it is out of the money, and we can get 1%. So 1% of $33.50 would be $33. So you can see we can get $33 or better. We can barely get enough premium to make this trade. That's the way BAC is. It's a low premium stock. Last time we did Macy's, which I would call a medium premium stock. And the next time we do a cycle, I might do a high premium stock. Something crazy like one of those meme stocks or something, something crazy high, if I can find it. And you can see here that we are building a list of stocks that are around $30. Some of them are kind of coming out. This one's $49 now, so obviously that shouldn't be on the list. This $41. But if anyone has a $30 stock that they don't see on this list, please let me know, and I'll add it to the list. Okay, so what do we do next? We're going to do the normal wheel situation. We have our hedge on. Let's do the wheel. So I'm going to sell this $33.50 put. I'm going to do one because my account's between $5,000 and $10,000. So I'm going to do one. If I had $10,000 or more, 10 to 15,000, I would do two. So that's just the sizing, the way I have it set up. So I'm going to sell this. I'll try to get $1 more. Okay, looks like that filled. So we got $35. Now we're going to protect our hedge. So we're going to go back into this same expiration cycle, the nearest one, and we're going to buy something for like $5 or $6. $8 or $9 is too much, so I'm going to buy this $35.50. And what this is for, I'm just going to buy one of those, is to protect the hedge. Start at $3. And I'll work it up to $4. Okay, so that's filled. Okay, so now for the week, I'm pretty much finished for the week. So you can see everything now. The only one thing I'm going to do now is this $35.50. If on Friday, towards the close, if Macy's is over $35.50, I'm going to sell this and collect whatever I can get for it. So I have my alarm set 15 minutes before the market closes. I'm going to go in, take a look. So this basically, if I wasn't doing a live stream, this thing would take, 5 minutes, 10 minutes a week. And that's the kind of system I like, something that takes 5-10 minutes a week. That's all you do, look at it once and you're done with it. I don't really even look at this. or pay much attention to it, and we're looking to maybe collect $30 this week, which should outpace the depreciation of our long put, our put hedge. Okay. Also on this particular system, you can see my P&L, my real P&L right here. Um, this includes all commissions and all fees and everything. I'm talking about net liquidation numbers. This is up approximately 22% year to date. Okay, and on the Premier Level 5, I think I forgot to go over those numbers. Let's see here. Let me do that real quick. So this particular account, oh, I did say it was the largest drawdown was about 4%. It's down about 1.5% now. It's compared to the S&P, which was down 19% at the low, and it's down 6.75%. I think I did mention that, but I wanted to make sure I made that clear. Keep those drawdowns low. Okay. Also on the safe wheel, let's go back to the safe wheel. If you're interested in the flow chart that I put together, it'll tell you all the rules in every scenario, because I have not gone through every scenario while trading it live in the last 7 or 8 months. And so if you want to know every scenario, I've got it in a flow chart that's available, link in the description there. And I've kept that price pretty low at only $59. Okay, a whole system, a whole trading system that actually works for $59. That's pretty good. I've actually had people complain about that, which is kind of funny, because I've seen people spend $2, $3, $5, $10,000 and have a system that doesn't even work. Okay, so let me get into your questions here. All right, I'm the one who knocks. Can you show the payout chart of the safe wheel? Oh, okay. I think you mean the Analyze tab. Are we on the safe wheel right now? Yes, the safe wheel, Analyze. Let's see if that's correct. If I have everything marked correctly. Okay, yeah. Well, it doesn't look too good, does it? It's all below the break even and everything. And that has to do with the put hedge depreciating. And this does not include all of the premium that I've collected in the past. So it's a little bit misleading, but you can take a look. It does have some positive delta, it looks like, because it's wanting the market to go up based on the position I have. But it doesn't take into account the history of this cycle, though, so it's a little bit inaccurate. And I think with BAC, I might be down a little bit because the put hedge has depreciated possibly faster than the premium that I was selling near term. Okay. Walter, any fundamental reasons to suspect that the safe wheel would not work for stocks below 20 or above 40 if the other criteria are met? For sure it will work. I just did all my back tests based on that number, because I wanted to take a $5,000 account and I wanted to be able to trade one contract. And so that worked out to be a stock between $20 and $40. So as the stock price goes higher, you can use up too much margin with a $5,000 account trading one. If you have, it's possible, I haven't back tested it, but it's probable that you can do a $60 stock that might be between, say, 50 and 70, for example, and you would need $10,000 and you would do one contract. It probably works out that way, more than likely, but I haven't back tested it. So I just know around that $30 range, I can use $5,000 in one. So it's all about sizing. It's not about anything else. There's a lot of stocks that would qualify as long as your sizing is done correctly. But see, it doesn't matter which stock it is. So since it doesn't matter what stock it is, why worry about doing a $10 stock or a $50 stock? It doesn't really matter. The way I've categorized them so far is you've got your low premium, like VAC, you got your medium premium, which is Macy's, which worked out really well. And then we got our high premium ones, which what I'm going to go to next. So it's all about that. It's more about that than it is about any other variable. And then you just find one in the $30 range because it's just better for sizing. Okay, I'm the one who knocks. Watch the weighted Vega video. I think I might need to watch it again. Oh, yeah. Yeah, I mean, Ron Bertino's a smart guy and he's got a lot of good concepts, and sometimes you got to watch them more than once to get them. Kevin from Florida, how you doing? All right, let's go down. Okay, Sharon. Seems like BAC isn't a good stock for the safe wheel. We keep losing on the 27 put hedge, not getting enough on the weekly put sale. It's possible. We'll know when this cycle's over, and it might be better to stay away from the lower end or lower volatility stocks with this. I'm the one who knocks here in India, and we can only go 3 months out. Okay, can I make this work with a 90 DTE put hedge? Wow, if I had to go to 90 DTE, I might only do 2 rather than 3, but I'd have to back test it. You should back test it. But that would be my thought originally of how to deal with that problem. And it might not work at all. And a BYND, so there it is. BYND's on the list, so thank you for that. But actually, it'll be off the list because it's over $40. Maybe you're talking about how it went up today or something. I don't know. I think I read something on it. Okay. Jason, suppose a put hedge for a different underlying costs 2 to 3 times that of BAC. Would you try to get more than 2 to 3% premium? Well, no. But typically, like when I was doing Macy's, I was sometimes collecting like $40 instead of $43 instead of 33 or whatever it was. So typically that premium, when the underlying, the put hedge costs more, that means there's more premium all the way up the chain. It's not just costs more way over there at the 150 DTE. It costs more near term too. So their relationship exists where you're going to collect a lot more premium. But see, most of the money is made in this system when you get assigned the stock. You sell a covered call out of the money, and then you get called away. And the difference between what you got assigned and what you sold the call for, that difference is where the money is really made in the system. So we have to really kind of wait for that to happen to really see where the money's made. If we don't, we might. If that never happened, if we never got assigned and then sold a call and then got called away, it might be just a break-even situation. I mean, it's not that, you're not making a killing. So you're waiting for that particular situation to happen. I'm the one who knocks. Will you say it's logical to risk more? Tasty trade method. If you have a small account and then reduce your risk account, yes, I would do that. If I had a small account, $5,000, that's all I had, I would risk more. You probably know my history. I blew up my account 6 times all the way up until 2008. And, it probably had to do with that concept of, I don't have enough money to get conservative yet. So I would risk more. Sure, I would do that. All right. Hedge fund of 1. Interesting. Are the 8 filters documented in the paid course? No, they are not. They're proprietary. I do not share them, and I always get asked what they are, but I don't give that away. I may do a course someday. I don't know. The problem with doing courses is people rip them off and they put them for sale for 50 bucks. And it's just pretty annoying. Okay, Walter, you said Macy's, but you meant VAC. Okay, well, when I'm talking about Macy's, that's a medium uh, premium, and BAC is a low premium, and we're working with BAC right now. We're in BAC right now. Just to clarify that. Okay, Matt, can I suggest adding a recommended put hedge price on the safe wheel? Oh, exited RIVN at a big loss. I feel like the put hedge were quite expensive at 80% and the stock kept inching higher, wiped out all gains. Yeah, there's some risk, especially in the type of market that we've been in the last couple of weeks, where the market just kind of goes higher and higher, but it doesn't go through your long call. It just kind of inches higher and higher and higher. You're going to take a loss in that cycle. So, and that's the reason why this is only like a 10% annualized return, is because we're up 22%, but you never know, we could be up 10% at the end of the year because of that situation. So that happens. Will, Z looks pretty good, but the $5 call is a little far from the money on it. Z, do we have Z on the list? Yes. Oh, yeah, it's kind of getting close to that $40 range. If I were to go in and start over, I'd look at the stocks that were closest to $30. And also the ones that had, like I said, I'm going to kind of go with something that has a higher premium. It may be that I'm going to go for the medium premium stocks in the future. I don't know yet. I'm going to go with a higher premium one for a while, see how that works out. Will, you may want to add AMC, but it's difficult to buy a call. Let's see, is AMC not on here? Okay. AMC. All right, thanks, Will. Let's see what I say. Yeah, that's might be a decent one, and that's the crazy kind of high flyer that I'm talking about in terms of the high premium. JMS, hello, Carl. The safe wheel is working better with sideways stocks. BAC was not in sideways when I took it. Do I consider this? No, I do not. I do not know what direction stock's going to go. I just don't know. I don't think anybody knows. If I thought I could figure that out, I'd be doing things differently. I'd be buying calls. I'd be buying puts if I knew the direction of underlying. Okay, Walter, you start your cycle with cash and a short put. Could you just do as well, starting a long equity and selling a short? Yeah, I could start that way. I think there's probably more premium in selling the put first, doing that whole wheel strategy from the beginning. I think that you can gather more premium that way. But again, like you said, like I've said already, the money is in the selling the short call. So, I have to look at that. Maybe that is something to be thinking about. But right now I have the system set up the way that I do. I back tested it. I like it. So I'm probably not going to do some a major overhaul anytime soon. Typically at the end of the year, I kind of reassess everything. And, the beginning of the year, I make changes. I think BAC will eventually be profitable. We still haven't been assigned on it, right? And we're only down like 60 bucks. Okay, good. I haven't done the numbers, but it sounds right. Down 60 bucks and we haven't been assigned. So, BAC still might work. I agree. Javier, how do you figure out when a stock is medium, low, or high premium? You said BAC is low, Macy's is medium. I guess it's just a feel for it, or maybe you can just look at the, let's look at BAC. And Look at the trade tab. You can look at this number here. You see how these are in the 30s, and then you can look at AMC, and they're in the 200s, 164. And then we can look at Macy's in the 70s. Okay, so maybe in the 70s is medium, in the 30s or 40s is low, and in the hundreds is high. So that give you a ballpark right there. Walter, thank you, Walter. Don't forget to subscribe. And if you want to get the notifications for my Safe Wheel or for this live stream, you need to hit that notification bell. Otherwise, you probably won't be able to find it. I have a lot of people that are in my Discord that ask me for a link to this because they can't find it. And I don't know why that happens, but it's better to be subscribed and hit the notification bell to make sure you can get in here. Michael, and the analyst almost looks like a straight line. Let's see. Yeah, it does. It does look like it has quite a bit of long delta. But see, the other thing is, if we come down into here, let's say we come down to 29 or whatever, this T+0 line is going to rise, and that has to do with volatility rising, and because we own more puts than we have sold, this line is actually going to rise up due to volatility. It's more of a kind of a second order Greek kind of thing. Okay, Javier, thank you. You're welcome, Javier. Okay, I don't see any more questions. I'll give it just a second to see if anyone wants to post any more questions. Okay. Well, I always like to say at the end, if the P&L is not real, what else are they trying to conceal? Okay, I'm going to end the broadcast. We'll see you guys next week.